All right, welcome back. It's time for Talking Numbers. The elections aren't the only thing moving the markets these last few weeks, that's for sure. The fact most on Wall Street are looking at are statements by the Federal Reserve. In fact, statements that the Fed made in August that suggested it will likely continue quantitative easing. The S&P is up 13% since Ben Bernanke made those comments. Despite that rally, though, most investors still don't know what the Fed will say when it ends the two-day meeting tomorrow. Joining me now to give us some idea of what we'll hear on Wednesday, plus how you should be positioned ahead of the news, is Pankaj Patel. He's Managing Director, Quantitative Strategies with Credit Suisse. Pankaj, great to see you again. Welcome back.
Thank you, Maria.
What's considered favorable and unfavorable in terms of the announcements and the language coming out of the Fed tomorrow? Define the terms for us.
Yeah, what we think, first let me define favorable. If Fed announces $800 billion or more of the purchase of assets for next 12 months, that would be considered favorable. And if it is anything less than that or substantially less than that, it will be unfavorable. Say if it is favorable, it will be good for the equity market, and if it is unfavorable, it will not be good for the equity market.
So what do you think the market reaction will be? Let's say, hypothetically speaking, we get $500 billion, which of course is the magic number being spoken about on trading desks these days.
Yeah. Well, that would be, I would say, more on unfavorable side, but I think I would say at least it has to be $800 billion or more. If that happens, then the dollar will continue to go down and interest rate will continue to go down, and that is because of that it will be favorable for the equity markets.
So it would be zero. It will be favorable for the equity markets. My apologies. Okay. So what about if the Fed makes an unfavorable announcement below $500 billion?
Then it will, as I said, the chances are the dollar will go up and the interest rates will go up, and that will be unfavorable for the equity market. And in that case, investors have to be careful about that.
So talk to us about the bottom line here, Pankaj. What should investors walk away from this segment with?
The bottom line is, again, we think the favorable scenario is likely to happen or more likely to happen than unfavorable scenario. So we are expecting a Fed to have $800 billion or more of asset purchase program for next 12 months. And if that happens, they should look for the profitability kind of factors, earnings momentum factors, and momentum-based factors.
All right. Pankaj, thanks so much. We appreciate your time. Thanks so much.